Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and/or financial topics. So let's dive right in, take a look, see what's going on today. If you want to follow me, it's at Finance. And if you want to join our community, finding-value.com, where I dive deeper into all these topics, sectors, looking for investment opportunities, and sharing those opportunities with everybody in the community. I also share my opinions about what is happening in the markets. I do this through a three-pillar approach. That approach is market cycles, technical analysis, and ratios. And that will get you where you need to be. Are those three things that I really dove into to figure out what is needed to figure out these markets and be in the right place at the right time, so to speak. It's not perfect timing. The timing is based off value. You still have to be incredibly patient. I'm not saying I can time short-term markets, but good entries. If you're patient enough, I think these will be incredibly fruitful, is what I'll say. If you're interested, special is a coupon code. It costs $25 for the first month only on the monthly membership using special as a coupon code. It's only good for the first month for that 25 bucks. You can also use it on the yearly membership. You save $100. It's $500 charge for the entire year. You get to learn a whole bunch about the markets. And if you guys are really interested in markets like I am, and kind of geek out on the markets, it's a good spot to be. So Eric Doherty says, breaking, experts are shocked as the United States adds a stunning plus 119,000 jobs, despite only 50,000 expected. Federal government lost 3,000 jobs. Wow, CNBC can hardly believe it. Non-farm payrolls up a robust 119,000. 119K is the best since April. Do you know what this is? This is going to put pressure on interest rates to go up unless we get some sort of slowdown. But slowdowns generally come from employment. It's unemployment going up, employment going down. And then that's when you get these recessions. It's a slowdown in employment. So if this number is true, it went up 119,000. Cycle investment strategy. This is what I believe is going on. He says, we often focus on shorter term charts here on X, but what we're really positioning for are the major economic shifts. There are periods, we call them lost decades, when equity markets move sideways for 10 years or more. Only a few investors seem to know this, but it's exactly during these phases that you want to own commodities and emerging markets for their outperformance. And this is Dow Jones potentially going into a lost decade. That's exactly what I think is coming. 100% to the T. Why do I think that? Because everything in the market is saying that that is going to be the case here at some point. Valuations of financial assets versus commodities is one. Gold is outperforming the Dow Jones Industrial Average. That's number two. We've got an increasing interest rate environment that's broken that 45-year downtrend. All of these things are pointing to this to occur. Everything. I can't even find stuff that points differently. It's all pointing to this lost decade. The valuations, if you read about Howard Marks and where the valuations are, it almost in every single time in history, forward returns have always been plus 2% to minus 2% over the next 10 years annually. So if that were to occur, I mean, that's the lost decade. And that's based off the valuations. So this is, I think, what is coming. And everything that I look at from a technical analysis base, market cycles, valuations, it all points to this. So it doesn't mean that it's going to happen immediate. It could happen immediately. where we get a rollover in the S&P, the Dow, Bitcoin drops. It sure looks like that could be the case. And then we get this big lost decade. And then commodities and precious metals absolutely rip. But that's a 45-year cup and handle in silver. That's also evidence that this is going to happen. The cup and handle breakout on gold. All of it is evidence, guys. All of the charts that I look at, the thousands of different things that I look at in the markets, ratio charts, regular charts, dollar, DXY, all these things are interconnected, which is pointing to this. Sam says, I don't think energy's leadership is going anywhere away anytime soon. Get used to it. And this is energy versus the S&P 500, and it's ready to break out. Now, what people are going to do, and this is the wrong thing to do, you can have a down day or a down week, and people are going to say, well, how come it's not going up? That is definitely not how it works. You need a lot of education to get your mind right. The secular market that's coming, the last decade, the upward move in energy stocks outperforming the S&P. This here is gold and silver mining index versus Bitcoin, and you can see the squeeze and the breakout. This started in 2009-10 was the bottom of the cycle up here, where Bitcoin outperformed or financial assets outperformed all the way to the peak, which is the top over here in 2024 and 2025. And now we're breaking out where gold and silver is going to outperform Bitcoin. It's not just gold and silver outperforming Bitcoin. What this is it's a changing dynamic in the markets where this chart is signaling financial assets is the representation of Bitcoin and hard assets is the representation of XAU. So it's hard assets outperforming financial assets. It just broke out and it's starting to do that. And that is the last decade. That is what this is, a financial asset. So Bitcoin is a representation of the Dow Jones. And hard assets is a representation of precious metals and gold in particular. As gold outperforms, we're going into the lost decade. That's when these lost decades occur. So every single lost decade, here, and here, gold outperformed in every single one. And if gold is starting to outperform, and this is the gold, silver mining companies, if gold's going to start to outperform, that is signaling the bottom of the cycle for hard assets and the top of the cycle for financial assets. So this is BTC or BTC just priced in dollars. You can see the breakdown there. See it breaking down? I think that this is probably the beginning of it. And then you're probably going to see the S&P maybe perhaps roll over too. This is entering the lost decade. And this is kind of like coming into that top of the lost decade. And I hope this makes sense. I've been talking about this for years. And the commodity bull market is going to start somewhere in this cycle here. It started in 2020, and then this is going to peak out, and then the commodity bull is going to run. And then the ratio is going to go ballistic. So these will all break out upwards against financial assets. Grady says the precious metals ratio charts I've posted is your ticket out of the rat race. Fortunes will be made. This proxy chart is saying the tide is turning. The capital rotation is in the making. The pink reversal pattern is now broken to the upside. And this is First Majestic, which is a representation of hard assets, and NVIDIA, which is a representation of financial assets. And this has a false breakdown, and then we're going to do a slingshot around the apex move is what he calls it. So expecting an end around the apex move, what he's coined his own term. I call it a slingshot because usually you get a false breakdown, and then it slingshots higher. And remember, we've got that 45-year cup and handle pattern in silver, and First Majestic is a silver producer. So it's coming. It's all lining up, and we're going to have our fun in the sun here soon. Now, depending on how the S&P drops, if it drops rapidly, you could get margin calls, and that could get a sell everything event, potentially. But it depends on how it falls, and it depends at the rate that it falls. Another one from Grady, it says, if gold is a 5x from here at least, which I think, Imagine where platinum would be if this ratio goes back to all-time highs, which would be 5 times 8. So it'd be 8 times 5, which is 4,000 or 40x. 40x. Posted that platinum and palladium were about to move big, and now they are. The PGM bull market has now started, and it will be a complete animal, outperforming even silver in his view. And this is platinum versus gold, and the falling wedge, 24-year bullish falling wedge that we're going to eventually break out of. I am fully loaded in silver and platinum. I'm going to make the most out of this bull market. And the reason I chose the physical metals is because you don't have the risk associated with mining companies. If they start to do nationalization, I don't have that problem. If management screws something up, if they have too much debt, if inflation is too high for them to make money to mine, the price will just keep going up. And I think the easiest way to make the money with the least amount of risk is to do the physical metals themselves. And that's silver and platinum. So these charts are all indicating the platinum. Let's do platinum to gold ratio. So platinum to gold futures ratios. And we're in this trying to break out right here. This is where we're at. We haven't broken out yet. And what this also signifies is that when platinum outperforms gold, the stock market generally goes down. There was a study done, I think it was done by Dartmouth, I think, or something like that. Some PhD guys went through the markets and they said that whenever gold outperformed platinum, you were in a financial asset outperformance area. So from here to here, this is financial assets outperforming. As platinum outperforms gold, you're heading into a hard asset commodity boom. So that's what this is back here. We bottomed in 96 in this squeeze up of a corner, and this was a commodity boom all the way up to the peak here in 2008. So this was all commodity boom, that area there. This was a financial asset boom as it goes downward. And what I'm looking for is the commodity boom, which is in a flag pattern here. This is going to break higher. It just takes time. People, their time frames are all messed up. They think things happen very quickly. This happens over many years. So the next decade plus is going to be a lost decade in financial assets like the S&P 500 and NASDAQ. And then hard assets are they're going to do like they're going to have many, many decades of returns that happen very quickly in like 5 years. That's why I'm so excited about commodities, is because they move so much to the upside. The only thing that I am struggling with is when copper and oil get behind in the supply, I have no idea how they're going to catch back up. The projects are not out there. The reserves are not out there. Now, reserves are not necessarily flow rate. Mining or doing SAG-D and the money it takes per barrel of oil and the flow rates that they get is nowhere near the flow rate that we're going to be losing on some of these old fields. So Gawar and some of the big boys over in the Middle East, you're not going to be able to make up those losses very easily, is what I'll say. And you're exchanging very high energy return on investment barrels and replacing them with very low energy return on investment barrels. So your net energy gain is declining even if you're increasing production of the lower energy return barrels. I know that's kind of a higher order of thinking there, but this is going to break here, and this is where the big moves are going to come. And I think gold's going to continue to go up, priced in dollars. Platinum is just going to run faster. And then when we get up here, platinum's going to be two times the price of gold. If gold is, let's just call it like $10, $15, $20,000, platinum's going to be $20, $30, $40,000, depending on where gold is. And I bought it all underneath $1,000 with premium. My cost basis is probably in the 800s or 700, or probably 800s. would be my guess, without a premium. Coming down, we've got XOP ETF of energy exploration versus Bitcoin. The cycle is turning. And what this is a double bottom. We've got a squeezing falling wedge on the left-hand side here. Bottom one, bottom two, and now we are breaking out. Bitcoin looks pretty rough right now, and energy's holding its ground. Eventually, if the selling pressure subsides a little bit, like the selling intensity, so we could still have BTC go down, it just goes down 1 or 2% instead of 5 or 6 or 7%. The faster it goes down, you get margin calls, which it starts to impact the other sectors. But when that original selling pressure subsides, and it's usually the strongest in the beginning because you have the largest amount of mismatch between sellers and buyers is in the beginning, and then the retail people start to panic and they all start selling and stuff like that. The beginning can be a little bit rough, but we can ride it out, and I think this is going to go all the way back up. That's the decade that's coming. It's a double bottom. This is your bottoming phase in the ratio. The XOP is already bottomed. It bottomed in 2020, priced in dollars, and then Bitcoin and XOP ran together under this period here, this whole period. They both ran up, and Bitcoin was just running faster. Now, I think that whole cycle's turned, and energy is going to do something ridiculous. I mean ridiculous. It's all coming, and we're buying this bottom here in a variety of different companies. That's what we're doing. XAU, which is the gold and silver sector versus NASDAQ index. It's a huge double bottom pattern. Notice these patterns are all the same. Now this one's really drawn out on the right-hand side. What this means is XAU and the NASDAQ composite have been going up together. I think that this eventually will turn higher and go all the way back up. So you're going to see energy outperform, which is just like the 1970s, and you're going to see gold and silver mining companies and gold and silver, the precious metals, outperform. That's what this chart is suggesting on a falling wedge double bottom. And here's another one. This is the energy ETF XLE versus the NASDAQ index. I said looks, doesn't it? It looks good is what I meant to say. But what this is a cycle. Cycle up, cycle down. You can see the market cycle in this ratio chart. This is hard asset outperformance. This is from 1999 up to 2008, where XLE outperformed. We had a bottom. This is where you want to buy NASDAQ, was over here. Then you ride NASDAQ all the way down. And it really didn't start to accelerate till 2014. This move lower on a lot of the companies, there's a lot of chop in it. We're getting a lot of chop over here too, which happens at bottoms. So at tops, you get a lot of choppiness. It doesn't move very quickly. People don't believe in it. It's kind of the disbelief phase. And then we rip. And that's where the NASDAQ ripped against energy, 2014 all the way to 2020. 2020 was the ultimate bottom. If you look at that bottom, it's a shoulder, head, shoulder, inverted. That's a bottoming pattern. We broke out, and then we did a retest based off of the top of this pattern here. So if I were to do XLE divided by this and show you what that looks like, you would extend this guy here all the way over. And what you get is, roughly where that support is, you get a breakout of this inverted shoulder, head, shoulder. Then you get a retest to back on top of it, and now we've got a bullish engulfing, which looks good to go higher. So that's what we've seen. This here is a double bottom pattern where you get this big double bottom, and then this is going to go all the way back up and cycle back up where that green line is. 2036 is what I have for the cycle duration. So we're going to do 10 years in a bull market from where we are today, roughly up to the peak. And then you're going to get a topping pattern up here eventually in the energy versus the NASDAQ. But you get a lot of choppiness. And again, you get a lot of choppiness up here. And those are your turning points. And we're at the turning point for hard assets to outperform the NASDAQ and financial assets. All of what I look at, this is all congruent with each other in these cycles. So just to let you know, this is a ratio chart which is showing a market cycle, and we're using technical analysis, which is we're using the full three pillars here to determine where we're at in the cycle. And what I would do is I'd be buying and accumulating in this bottom here of hard assets, energy stocks in particular for this ratio here. Um, we also I also like fertilizers and iron ore and all these other sectors that are out there with just gigantic potential. So here's SLX. This is going to be the steel VanEck steel ETF, just to show you guys that the cycle it's across everything. It's not just one thing. So there's your falling wedge here. This is your bottoming that it's doing. So we can throw this across here. This one's come down a little bit more than maybe some of the other ones, but sometimes it does a bottom like this. You could say that this is kind of that double bottom here. We've come on up and then we've come back, and this is just starting to break out to the upside against the S&P 500. So this one's still very, very low in relationship to the NASDAQ. But if you were to look at it, your bottom was not that. Your bottom was in 2020. This was the beginning of the cycle, priced in dollars. And this is where I would want to buy it. I want to buy it here and here. And now you can see it breaking out against resistance, and we're going to go into a gigantic, big uptrend. We're going to go like way, way, way up here, like way up. And this will be a big bottoming pattern here. More than likely, you're going to see a lot of money printing, quantitative easing, all that stuff's going to come. Oh, and this is the double bottom I'm talking about, the breakout of the neckline, and we're at the second low here, or inverse head and shoulders that we saw too, and then the breakout of that. And we were retesting the neckline on this guy here. This pullback's a retest. We find doing nothing the most difficult task of all, says Warren Buffett, and I think that's probably the most difficult for everyone. Is just not doing anything. They always want to do something. Hey, should I take profit? Should I do this? It's like, no, guys, just let it go. We're at the bottom of this market. I just showed you a bunch of ratio charts. We're at the bottom of the market. This is when you don't do anything. If you screwed up in your allocation, okay, fine. But most of the time, swapping, switching, doing all these things, it doesn't net what the outcome is. It usually messes you up. That's what I'll say. And what most people want to do is they want to trim winners and feed the ones that are still down. And that's generally a bad idea because there could be a few really big winners that win very big. And you're trimming very early and cutting those upside potential returns. And that's all I've got for today. So I'm going to end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Specials that coupon code. We've got a Q&A session coming up this weekend, 7 a.m. Mountain Time on Saturday. They are recorded. You don't have to show up. You can always ask questions beforehand, and I'll answer them in the Q&A session. It's a Zoom call. I interact face-to-face with everyone, and you can ask me whatever you'd like. All right, guys, that's all I've got. So we'll catch you next time. See ya.